Alright, so this video is going to be a bit different. I want to treat it like a real consultation. The kind of informative talk I'd give to any client sitting across from me, asking me how things actually work in Dubai. This will be part of a mini-series, and the goal is simple: give you clear, practical guidance based on how things really are on the ground here in the UAE. So let's get started. How it works legally to buy property in Dubai as a foreigner. This is one of the first questions people ask, and honestly, it's way easier than you might think. To buy a property in Dubai as a foreigner, all you need is your passport, email, and residential address. That is it. You don't need a residency visa, and you don't need to open a company. You can buy under your own name with just those three things. Now, the Dubai Land Department, which is the government authority that manages all property transactions in Dubai, has made the process really smooth. It's all digital, and you can do everything online or remotely. So here's how it works when you're buying an off-plan property. You start by transferring the booking deposit to the developer. Once they received it, they'll give you a booking form and the escrow account details. I'll explain more about what the escrow account is in a second. Then you continue with the full initial deposit according to the payment plan. After that, depending on how much you've paid and which developer you're working with, you'll receive the SPA, or sales and purchase agreement. There's the official contract stamped by the Dubai Land Department. This usually happens a few months after your initial payment, but it can be sooner. During construction, you'll also receive a document called the Okut. This is issued by the government, and it basically serves as your title deed while the project is still being built. Then, once the property is completed and handed over, you get your final title deed. This is the document you'll use if you want to rent out your property, sell it, register it under some other name officially. So what is an escrow account? An escrow account is a legal safety measure that protects your money. Since 2008, Dubai has required all registered developers to use escrow accounts. So when you make a payment, that money goes into a government-regulated account, not directly into the developer's hands. This means that if anything goes wrong, like delays, breach of contract, or even bankruptcy, the government can step in and return the money to the investor, either in full or partially, depending on the situation. That's one of the reasons Dubai has become a trusted investment market, as investors feel safe knowing their money isn't just disappearing into someone's bank account. Now let's talk about taxes, my favorite topic. Now this one is easy. When you buy a property in Dubai, you pay a 4% fee to the Dubai Land Department. This is a one-time fee based on the purchase price of the property. After that, you don't pay tax. So that means you don't pay capital gains tax, income tax on rental income, or any annual property tax. There has been a discussion about a 9% corporate tax on profits above 375,000 dirham, but it's still in the process of being clarified. But essentially, it's only charged on the amount above a threshold. So for example, if you buy a property for 1 million and later sell it for 1.4 million, you've made 400,000 dirham in profit. You would only be taxed 9% on the final 25,000 dirham above the threshold, which works out to be 2,250 dirham. Not a huge deal. But in general, if you're buying as a private individual, you don't have to worry about ongoing taxes. So what's the price of a property in Dubai? That depends on a few things: where the property is located, who the developer is, whether it's an off-plan or ready property, what the view is, and if it's branded or not. Let me give you a general idea. If you're looking to buy something central in downtown Dubai, where the Burj Khalifa is, or in Dubai Marina, which is another tourist hotspot, you're going to need somewhere between $300,000 and $500,000 for a studio or one bedroom. That's roughly 275,000 euros to 460,000 euros. If you're looking for a sea-facing property, you're usually starting from $500,000 and going up to $1 million, depending on the beach. So JBR, Palm Jumeirah, Dubai Islands, Maritime City, and so on. If you're looking at the luxury segment, a full Burj Khalifa view penthouse, Royal Atlantis, Villa on the Palm, then you're entering the $5 million plus range. But we'll talk about that in another video. Actually, I'll be doing a whole part 2 where I break this down by budget tier, so 300,000, 500,000, 1 million plus, and so on, and show you what kind of units and areas make sense in each bracket. Now let's talk about off-plan versus ready properties. This is a big one. I work with the largest off-plan real estate consultants in the UAE. And the reason we focus so much on off-plan is because we believe that's where the best appreciation and ROI opportunities are. Yes, you can buy a ready property and rent it out immediately. That's a valid strategy. But here's the thing. When you're buying ready, you're usually paying a markup because someone else already bought it earlier on and made a profit. With off-plan, you're buying it early and you're buying at today's price not at tomorrow's. So what kind of appreciation can you expect? Generally, we see around 8 to 12% per year during the construction period. Then on the handover year, it's normal to see an additional 20% to 25% appreciation. So over 3 years, that's at least 40% total growth, and in some cases, much more. Now here's where it gets even more interesting, because off-plan is paid in stages. You're often only investing 30 to 50% of the property value during construction. So if you sell before handover, your return on invested capital can be significantly higher than if you had bought the full property up front. Of course, it depends on the project, the area, the floor, the view. Even two units in the same building can perform very differently. And that's where a good consultant really makes a difference. So what about rental returns? If you buy a ready property, you can start renting right away and typically get 7 to 8% net ROI if the project is good. But if you buy off plan and wait until handover, you might see a 9 to 10% rental yield because you bought at a better price. So in the medium to long run, that extra yield plus the appreciation makes the waiting worth it. Now let's talk about another opportunity, off-plan resales. Sometimes an investor that bought off-plan needs to exit early. Let's say the project is halfway through construction and you're buying their unit at a slightly premium, maybe 10% more than the original price. That's what we call a distressed deal, and if handover is close and the appreciation outlook is strong, it can be a fantastic move. You're getting in later, which means less waiting, but still getting upside. And what about ready properties? Are there still good ones? Yes, definitely. Since COVID, the Dubai market has been on a strong upward trend. Liquidity is high, people who want to sell can usually sell fast, the market is very active. We've had waves of investment coming in, first from Russia, then from Europe, America, Latin America, China, and the Middle East. And all of this have kept the market moving. Now, we do expect a period of consolidation eventually, but that's healthy. And that's why when you invest, you want to look for areas that either have very low current supply, have big infrastructure plans, or are in early stages of development. Because when supply is tight and demand is growing, that's when prices go up, and that's when you make your return. There are many different strategies we can explore based on your goals, and I'm always happy to go deeper into those on a Zoom call or face-to-face. Thanks for watching. In part 2, we'll be talking about budget levels, what you can buy at a different price point, where you should be looking, whether villas or apartments make more sense, and what kind of returns you can expect in each category. We'll also cover what institutional investors are doing and the smart moves we're seeing in today's market. So stay tuned and feel free to message me on WhatsApp if you'd like a one-to-one consultation or want to ask anything specific. See you in the next one.